Many economists still believe that a recession, even a small one, might occur sometime in 2023 as a result of rising interest rates and declining consumer spending. The S&P 500's healthcare sector is focused on the Healthcare Select Sector Spider ETF XLV. Now, in theory, due to the fact that the healthcare spending is generally unrelated to the overall economy, meaning people are still going to get sick, they will still have to go to the doctor or the hospital for surgery or what have you, it's been seen historically as a defensive sector. So, in times of declines or risk-off environments, that money goes into defensive sectors such as the healthcare. Again, because there will never be a recession in the healthcare industry. So this particular ETF, the XLV, has roughly $40 billion in assets under management. So it's a pretty sizable ETF. For example, United Health, which is a health insurancer, and I believe it's the number one weighted stock on the Dow, is the one that has the most weight in this particular XLV ETF. Other companies that come to mind are also in the top 10 holdings include J&J, Merck, Eli Lilly, Abbey, Pfizer. These are the big pharma. So last year, when the S&P fell, I don't know, what did it fall? Double digits. XLV was only off 2%. However, in recent months, XLV has been down. This week will be the 9th consecutive down week. This is something it's never ever done in the history of the XLV. Never. So the question is it setting up for a buy? If we are going to have a recession, is price at a level that serves as a discount to buy long? If we see further declines in the equity markets, you're going to see money move over to defensive sectors such as healthcare, utilities, bonds as well. So let's take a look. We're going to start with the monthly chart. And my eyes directly point to the 120 level. Right now, price is at 128. Reason being, we had resistance. Price eventually broke resistance, and now we have support. My eyes also point to this area here. Right? Selling pressure, selling pressure, selling pressure. We'll say that's at 142. Alright, let's go to the weekly chart. Now here's what I was referring to. We have had nothing but down weeks, and this week was a gap down. So we had a break of the short-term uptrend line. And now we are holding this short-term downtrend line. More than likely, we're going to fill this gap here on the weekly chart. So I would think at a minimum we're going to get to the 126 level. Okay, let's go to the daily chart. So, because we are in the middle of this multi-month range, if the momentum's down, you can continue to ride the momentum, right? You can potentially buy in a pullback, at least to take it to a short-term target of 126. The other option is you can wait till price gets down to the 120 level in, I don't know, a couple of months, when and if the recession really kicks into gear, and potentially ride that back up. So there's two ways to play it. You can trade short term and short it, or you can play the longer term game and wait for price to, in my opinion, come down to the 120 level. Now, this level has also served in the past as support. So could we see a bounce at 126? Absolutely. So if you see a reversal pattern at the 126, your short-term target has to be this short-term downtrend line until it's breached. So your risk to reward may not be a lot, maybe 2 to 1, 1 to 1, not sure. Whereas waiting until and if price gets down to 120, this would be a swing position trade where you might be holding this for months. So to play again, you can short it down to the short-term target of 126, or you can wait to price. If price gets to 126 and ride it up, or you can wait for a potential bigger reward to risk ratio, wait for price if price gets down to the 120 level, and then ride that back up. Until next time.